Hey everybody, David Skrika, Prophet from Pessimism here. So we're going to look at something different here today. So of course, yesterday we had more tariff news, Trump putting 25% on parts and cars that are incoming to the US. So it's going to be interesting because this is all highly, in my opinion, inflationary and probably stagflationary. But we're going to quickly look at here at everything because what something I think is interesting. So this is, I don't know if you know who Robert Friedland is, but Friedland is um he's one of the biggest mining uh promoters, I guess you could say, or financiers in the world. He put in Diamond Fields, which was a gigantic find back in the 90s. He's got Ivanhoe, which has done very well. So, but anyhow, this is a something that he, basically posted, and what we can see here from the end of from 2014 to end of 2024, so that 10-year period, we can see that uh, US, so we're going to look, Chinese car exports have exploded, gone from about a million units to 6.4 million, making China actually the largest car exporter in the world. And I'm sure much of these, because US and Canada both have pretty high tariffs on Chinese cars. So what's kind of interesting is they're basically not even in those two markets, and they're still the largest in the world. A lot because in Asia and Africa and poor nations are buying these kind of smaller, cheaper Chinese cars. In Asia, a lot of the driving tends to be like city driving, and of course EVs are fine for that. So this you can see Japan has gone from about 4.6 million to 4.2 million. Germany from 4.2 to 3.2. Really, Germany, you can see, really got hit over COVID. And one reason that Germany hasn't come back as much is that, they have higher costs now because of energy. And what's interesting is the United States has been the number one collapse country in terms of car exports, right? And as you can see, this is millions of cars exported monthly, year on year, right? So year on year means year over year. So you can see that US, and so that means Chinese is doing 6 million a month, basically, right? Year over year. So, um, which would translate to 72 million a year. And you can see the US is down to 1.4 million. And when Trump took over office here in 2016, it was right about 4 million. And you can see even before COVID kind of tanked production, it was around 2.2 million, 2.5 million, and then COVID made it go down to about two. So, and then there was a little bounce after COVID, and it's continued to decline. So, and remember, Trump did do aluminum and steel tariffs and these kind of things at the end of his first term. So we can see this has just not worked. And now, if you look at it this way, and this is exports. Remember what Trump is doing. If you move your car factory to the US, you're probably just going to sell those cars domestically, right? And with those tariffs and trying to move all this production all domestically, um, um, you're not going to see this. I think it's going to hurt the U.S. car industry even more in terms of exports because those tariffs are going to make them even more uncompetitive and cheap Japanese and Chinese cars even more appealing, right? So and and like the fact of the matter is, in Europe, they don't really want US cars. I'm sorry, they just don't. Like they have Mercedes and BMW and Audi, and if you want a cheaper car, you can get a Fiat or a Peugeot. So you don't really need a Ford or a GM or a Chrysler or that sort of thing there, right? And obviously then you also have Jaguar and Bentley and things of this nature. And then the fancy producers, Ferrari, Lamborghini, Maserati, all that kind of stuff as well. So, so as well. And also remember, like car production, auto production is strategic in that if you ever did have a major war again in the world, you can turn those plants into munitions plants, plants to produce tanks, etc., right? Airplanes, whatever. So no one's going to really move that much production. Now they might. I think there is a new plant from a South Korean car company being built in Louisiana. So there's going to be a bit of that. There is going to see some production move. Obviously, the production of auto parts, because there's 25% duties, may move as well. So, but here's the problem with that is if you have all the parts and everything, these factories in Germany that make all of them, right? And then everything moves to the United States for parts, the cost of those parts and just set up everything, do everything, etc., build a new factory. And I guess some of these factories can just expand, but a lot of the cost of the parts is going to increase. It's going to be 10 or 20% more expensive to do it in the US than Germany or Japan or whatever. So it's really just a wash, etc. So I just find this interesting that it just shows you the first time around with tariffs and protectionism, it didn't not help the U.S. car industry at all in terms of exports. And now it's really a domestic based industry because Ford and GM revenues have actually been okay in recent years. And obviously Tesla has produced a lot more cars since 2014. So, you do have this, but it looks like it's a domestic kind of industry. It is kind of like Peugeot or something like that. Like Peugeots, we don't see Peugeots really, outside of Europe, especially outside of France. It's like a domestic industry. Like, Fiat is a pretty large company, but still you don't see a huge amount of Fiats. We see some on the road in North America, but like it's really just you go to Italy, they're everywhere, right? So these companies are kind of domestically based, and that's what looks like it's going to happen really to Ford and GM, that they're going to be more maybe American and North American based because they still obviously have plants in Mexico and Canada, and they're not going to really be anywhere else all over the world. Because, like I said, they're selling 4 million a month year over year in 2014, and now you're selling 1.4 million. So we'll have to see, what happens, etc. Right? So I just going to leave it on that note. And it's interesting because I was actually going to show this as a chart of the day, stock chart of the day, even before the tariffs. And then Trump did the tariffs yesterday and gave me a perfect reason to show this. So our next thing we're going to look at is a really interesting chart of the day. Is going to be tomorrow stock chart of the day. We're going to look at dilution of mining shares and not juniors, but majors, and show you this is one reason that the GDX, GDXJ, and HUI, all these indices and ETFs are way below the 2011 highs. Because while Microsoft and all these other companies have been doing, in tech companies, been doing buybacks, junior companies have just been basically printing shares, exercising shares, and that's basically caused this huge increase in most of the companies' floats. And a lot of the companies have much higher market caps actually than 2011, which was the high in the HUI, but the stock prices are much lower because there's so much shares outstanding. So, yeah, we're gonna take a look at that. So everybody take care, and I hope you enjoyed this little stock chart of the day here on autos. So take care. Bye.